From FXEmpire, this is Chris taking a look at the Australian dollar. The Aussie dollar initially did try to rally during the trading session on Wednesday, but has given back gains. This suggests to me that the market is going to continue to go back and forth around the 0.65 level. This is an area that is important because it used to be the major resistance above, and now it looks like it's trying to form some type of support region. Ultimately, I think this is a market that doesn't really know where it wants to go because quite frankly, risk appetite is all over the place. With that being the case, I like the idea of waiting to see if we get some type of impulsive candlestick to trade off of. The 50-day EMA is starting to cross below the 200-day EMA, kicking off the so-called death cross, which of course is a negative sign, but quite frankly, it's normally pretty late. So we'll see. At this point in time, if we were to rally, the 0.66 level above looks to be rather resistive. Underneath, we have a lot of support at the 0.6475 level. Anything below there probably opens up a move down to the 0.63 level in the Australian dollar. Keep in mind, the Australian dollar is highly levered to what happens in China and Asian markets in general. Ultimately, we have a scenario where risk appetite could come into the picture, and a lack of risk appetite very well could make the US dollar a lot more attractive as well. So do keep that in mind. Expect choppy conditions. I'm not expecting a big move one way or the other, at least not in the short term. But once we get a long candlestick, that could give us a bit of a heads up as to where we end up moving to.